Hello and welcome to the Sand to Pearls Stock Market Commentary. Market week ending Friday, October 25th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.92 to 1.97, advancing slightly further into bullish territory. The total count of securities in bullish or bearish patterns increased 8% to 2,323. The count of bearish stocks increased 6%, while the count of stocks in bullish patterns increased 9%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 8 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking the Membership tab, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 113 points for the 10th rise in 22 weeks. At a positive 410.27 points, it has now risen back above the October 2012 top, the second lowest top above plus 100 in the last 35 months. So the NASI is now below 6 of the 8 tops over plus 100 and above all 6 of the bottoms below minus 100 in the last 35 months. Volume analysis. In this week's market gauge volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 2 accumulation days and 2 distribution days. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. This week, the CCI 20 daily fell, but continued above plus 100, well outside the plus or minus 50 range for a valid zero-line reject. So we continue to wait for the CCI 20 daily to fall back within the plus or minus 50 range. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 37 weeks ago, while the daily CCI 20 began a Woody's uptrend 6 weeks ago. The CCI 20 weekly continues above plus 100 and remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 3 of the bottom 5 are negative. Bullish REITs remains in the top 5. S&P Retail has left the bottom 5 and entered the top 5. Oil Services has entered the bottom 5. Bearish Disk Drives has entered and leads the bottom 5. Networkers continues in the bottom 5. Semis has entered the bottom 5. Gold and silver has left the bottom 5 and now leads the top 5. Banks and brokers have left the top 5. Focus this week from ponziworld.blogspot.com, quote, "Global financial markets are now totally addicted to their Fed dopium and can't survive without it. The ultra-wealthy need the job market to remain weak in order to guarantee the continued flow of monetary stimulus." End quote. Go to the article BTFATH Buy the effing all-time high again and again for a review of the sad state of affairs in this anything but free market. Thank you for joining us for this week's stock market commentary from Sand to Pirls Market Signal. We hope that you're having a great weekend, that you have a fabulous week coming up, and wish you happy trading.